Round at the moment hasn't done an awful lot of movement, and we keep hearing about these low volumes. We are up just 0.4% at the moment.
Well, investors are still optimistic about a recovery in the ASX, it would seem, when you look at the latest GPS-Melbourne Institute index.
The Shareholder Confidence Index for November rose 1.4%, the fourth straight quarterly gain by the index.
The improvements have eased since last year, it would seem. Let's get across the numbers in a bit more detail. We're joined by Andrew Thain of Global Proxy Solicitation. Thank you very much, Andrew. Some growing confidence in the share market. How convinced are shareholders about the prospects, though, in terms of how strong the reading was?
Thank you. Look, the results have been very interesting indeed. Whilst there's been a confidence increase over the last 12 months of about 12%, what was interesting was the marginal improvement in confidence in the last quarter of only 1.4%. We've been conducting this in partnership, this survey with Melbourne Institute since 2009, and it is only a marginal increase. And in an environment where we're seeing interest rate cuts and the expectations of more cuts into the future, it's interesting that 2 out of 3 respondents are still sitting kind of on the sidelines when it comes to confidence about the markets, around returns and volatilities and, I guess, share intentions with buying and selling.
Andrew, Brooke and I were looking through the release, and as you say, in the last quarter, only a marginal increase, if you like, in terms of confidence, but really struggling to see, in terms of the breakdown of future trading intentions, where the expectations of further investing is going to be. It doesn't seem there's been any particular increase in any of the major sectors. The only increase really has been in that last segment of none of the above.
Yeah, look, you're spot on there, James. The interesting thing is, as I said, in the environment that we have with interest rates cuts and the expectation that there'll be more into the future, shareholders are happy just to sit on the sidelines. When we actually did the survey, over 50% of respondents came back with an expectation around share returns. They're looking for dividend yields, with 35% wanting capital growth. So I think the volatility is still there. I think, obviously, with the US fiscal cliff, European debt crisis and China slowdown, I think there's a lot of investors just sitting and happy to wait at the moment.
There was a breakdown as part of your survey as well on years of experience. It seemed that those with more experience, in fact, are getting more nervous. I hope that's the right read. Take us through that section of it, which makes me nervous, of course.
Yeah, Brooke, you're spot on again. Look, the investors that are participating, the interesting thing that we also looked at was when it comes to confidence around participating in capital raising into the future. Again, 2 out of 3 shareholders are at neutral confidence when it comes to investing in capital raisings. And if we look at all the work that GPS and what we've been doing over the last 12 months, there's been a number of companies, hundreds in fact, that have looked to raise capital, especially in that junior mining sector. And certainly we think 2013 is going to play out the same way, that junior miners are going to really struggle unless they communicate their story clearly to raise the necessary equity to get working capital and even exploration budgets. And that is obviously a concern for companies as we move into 2013 and beyond.
Andrew, I note that it's been going since about mid-2010, the index. I wanted to get some sort of sense of the accuracy of going from the survey of intentions to actual reality in terms of investment flows on the market.
Yeah, look, it actually, when we overlay it after the 3 years, it's proved to be a leading indicator in regards to shareholder investment and the index moves, closely monitoring each other. So when I look at it today, there's a lot of surveys out there that look at consumer confidence. We wanted to work with the Melbourne Institute to put out a survey which was really about shareholder confidence. So we are looking at Australians over the age of 18 that actually have shares and what are their intentions when it comes to returns, volatilities, and, as we said before, trading intentions around buying and selling.
So, given you've kind of termed it as a leading indicator, make it easy for people. What does this say about where this market's headed next?
Yeah, look, great question again, Brooke. It's sort of the status quo. It's kind of the next sort of quarter is indicating that more of the same. We're going to stay in a trading band as we have been for a while now, over the last couple of years. I think people are looking for resolution around the fiscal cliff. Again, new leadership in China. Obviously, whilst Europe's been quiet of late, we're looking at that as a concern. So I think a lot of investors have taken some gains in the medium term. They're looking to bank that, looking for dividend yield, in a small case looking for capital growth. But I think we're going to see more of the same into 2013. It's
just interesting that the survey seems to show a bit of a contrast, if you like. I mean, you made mention of the fact that likely to be a lack of demand in terms of capital raisings amongst some of the smaller miners, which would suggest a lack of risk appetite. But at the same time, looking at the results, the likes of the health sector, tiny amount of buy interest going on there, which is generally seen as more of a defensive nature. So you don't have much risk appetite, but there doesn't also seem much appetite for the more defensive style stocks.
Yeah, one of the areas that we sort of indicated 12 months ago was the industrial sector, and certainly the skew to a buying intention in that space, and that's continued on. You know, you're looking at mining and metals, you're looking at consumer staples, certainly discretionary retail is certainly you know, there's more selling than buying, but industrials as a sector continues to grow. We called that 12 months ago, and we're calling that again into 2013.
Andrew Thain, thank you so much for bringing us the results of that survey. We appreciate it. Thank you.
Thank you. Bye.
Speaking of confidence, there is confidence